A rally in chip makers pushed the S&P 500 to a fresh record for the 25th time since the year started. Nvidia hit the $3 trillion mark in terms of market cap, becoming the world's second most valuable company after overtaking Apple. Here in Europe, the Dutch ASML dethroned the French LVMH as the continent's second most valuable company, as the European Central Bank is preparing to announce its first interest rate cut as soon as today. So welcome. This is Swissquote's Daily Market Talk. So the data from the US yesterday was mixed. A softer than expected ADP read and a stronger than expected ISM services data actually marked yesterday's trading session. According to the latest data, the US economy added 152,000 new private jobs in May, so that's much lower than the 175,000 penciled in by analysts and the weakest number since the start of this year. Meanwhile, services sector expanded by the strongest pace in the past 9 months during the same month of May. So the bond traders decided to just focus on the weak ADP report rather than on the strong ISM read yesterday and sent the US 2-year yield down to 4.72% level. The fact that the Bank of Canada announced the wildly expected 25 base point cut and left the door open for more interest rate cuts if inflation, of course, progresses toward the right direction. And this expectation that the European Central Bank will be the second G7 central bank to announce its first interest rate cut today also helped tilting the balance in favor of the market dose and the central bank dose, and the lower yields boosted appetite in global indices. So the Canadian TSX index rebounded past its 50-day moving average. The European Stoxx 600 jumped while the S&P 500 was catapulted to a fresh record for the 25th time since this year started. Yes, the S&P 500 renewed record 25 times since the beginning of this year, regardless of the fact that we spent most of this year scaling back the Federal Reserve rate cut bets, and we are still not sure if the Fed will be able to cut its interest rates this year at all. So what's driving these stocks higher? Well, it's pretty much the technology stocks. The technology stocks are still behind the most of the upside pressure that we see in equity indices, thanks to the AI craze. In numbers, the top 10 stocks at the S&P 500 that include Microsoft, Nvidia, Apple, Amazon, Meta, Alphabet, and Broadcom, accounted for about 35.7% of the market cap after the strong May rally. And again, yesterday, Nvidia made the headlines. The stock rallied more than 5% at yesterday's trading session to a fresh record and joined the club of companies that are worth more than $3 trillion US. So as of yesterday's close, Nvidia is more valuable than Apple and just a touch less valuable than Microsoft, which obviously triggered this AI rally last year with OpenAI's ChatGPT. Apple, on the other hand, advanced by a meager 0.78% at yesterday's trading session and is now at a spitting distance from its own all-time high level after announcing a partnership with the very OpenAI and hoping that it could, eventually give the company's stagnant sales the sugar boost that it needs so much at the moment. Now, let's dive a little bit deeper into Nvidia though, because Nvidia advances like a bulldozer to fresh highs, and all this price rally emerges the question of whether, it could be justified. Now, it's always hard to say, obviously, yes, everything could be justified here while looking at a price chart that rises exponentially and pushes the PE ratio higher along with it. What is justified, however, is probably the sense of urgency that investors feel today about being part of the AI dream. Because what's happening today is, no doubt, the digital equivalent of the industrial revolution. So the opportunities are obviously huge for both the company and individuals. And Nvidia Nvidia is very much aware of the growing demand for AI and keeps its foot on the gas relentlessly. It announced last week, remember, that it will upgrade its AI accelerators every year, and the company is also working on a 360-degree offering, an ecosystem. So this means that Nvidia is not only focused on making ultra efficient AI chips, but they're also expanding their offering to software and to services to reach out to medium and to small size companies so that they can also integrate AI in their own business models. So this is perhaps what differentiates Nvidia today from its competitors out there. And some compare Nvidia's strategy today to Apple's closed system that worked actually so well in keeping the company on top of its game for years. And now the rumor has it that Nvidia is on the path to becoming the next Apple. And in terms of market cap, since yesterday, it is already more valuable than Apple. So bingo. For the crucial question of, is it too late to buy Nvidia? Well, listen, we asked the same question when Nvidia's price was around $500 US, $800 a share, and $1,000 a share, and now it is past $1,220 a share. And while other chip makers are doing well as well, because Qualcomm rose more than 3% at yesterday's trading session. AMD jumped nearly 4%. Even the sputtering Intel added 2.5% yesterday. And here in Europe, well, we also had a change in top ranking of the market leaders because the Dutch ASML, which sells machines to the world's leading chip makers like TSM, jumped 9.5% at yesterday's trading session and became Europe's second most valuable company in terms of market cap, overtaking the French LVMH of Louis Vuitton, on news that TSM will receive the high-NA extreme ultraviolet machine by the end of this year. And I asked ChatGPT, what's that high-NA blah blah, as I think that there is no one in a better position to answer that question than ChatGPT. And the thing replied by a detailed text and said that, the introduction of high-NA EUV machines is actually significant because it apparently represents a major technological advancement, enabling the production of even smaller and more powerful semiconductor devices. It also said that these machines are expected to play a critical role in the next generation of chip manufacturing, also supporting further advancements in electronics and in computing. So voila, TSM also rallied 6.85% at yesterday's trading session to a fresh high level. Now let's come back to earth. The European Central Bank is expected to announce a 25 basis point cut later today. And because that decision is broadly expected by analysts and priced in since months, it won't really matter that much for the market mood. The real question is, what tidbits will Lagarde drop regarding the future of interest rate cuts in Europe? Will she sound cautious about future rate cuts, or will she rather sound confident that this is, the first rate cut of a series of rate cuts expected to come regularly in the following months? Now, note that the latest CPI update from the Eurozone last week wasn't really enchanting, remember, as it actually hinted at rising price pressures last month in the Eurozone. But released yesterday, a softer than expected PPI figure for April for the Eurozone threw some cold water on these inflationary worries. The Eurodollar rebounded at yesterday's trading session but saw resistance into the 109 level, and a sufficiently dovish hint from Christine Lagarde at today's presser should bring the Euro bears in charge of the market and will let the Eurodollar ease a little bit more from the actual levels. So this is all for today. I'm İpek Özkardeskaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.